Ladies and gentlemen, open banking pioneers, good afternoon and a very warm welcome. Thank you for joining us around our campfire. In our campfire today, we're discussing the very hot topic of fraud and security. Now, this affects us all in our home and our commercial lives. And we believe by talking about it, it keeps that subject front of mind and it helps us to take 5 to stop fraud. So in feedback, you, our global community, tell us that you want to hear about the numbers. So stand by, we've got some very sobering ones for you. So by way of setting the scene, in a report recently published by our friends at UK Finance, they shared data on unauthorized fraudulent transactions, making card payments, remote banking, and authorized push payments, APP scams. For unauthorized fraud using card payments and remote banking, in H1, figures show a 7% rise on the year, taking it to 398.6 million, with APP scams at a staggering 71% increase, reporting losses at 355.3 million in the same period. Now, as we head into a credit crisis or recession, whatever you want to call it, I think with a high degree of certainty, we can all predict that these figures will continue to rise. Okay, so let's just change the tempo a little. Today, OBIE announced a phenomenal milestone. We as an industry in the UK have reached 1 billion of API calls in a month. That is 1 billion of API calls in a month. We all work incredibly hard in this industry to help it grow and to support it behind the scenes. So that is a milestone day and a proud day for us all. And it's a beautiful segue to talk about open banking, and it's built on strong security model. It's built on a trust framework. We have a security model for our APIs. The bedrock of this industry is around democratizing data and giving our consent to securely share our data with a third-party provider. So what we've done today is we've gathered a team of experts, absolutely world-renowned experts, to discuss the challenges we face in open banking to combat fraud. We take a realistic view of managing fraud, discussing what are acceptable levels of fraud. We talk about the appetite for fraud risk, and we look at how data is exposed in API transmission. So this is a real deep dive into fraud and security. Stand by because you are in for an absolute masterclass. So please do get involved. You can ask the panel questions. You can see that on the side of your screen. And we've also got a Slido poll so you can get involved in this very, very important conversation. Now, I'm absolutely thrilled to bits to welcome back Ali as our guest host. He's the editor-in-chief at FinTech Finance. And he and his guests have got a lot more figures to share with you. So we start with Ali having a fireside chat with Michael Huffman, Director of Fraud at Go Cardless. A huge thank you to Michael, who joins us from San Francisco, and a huge respect. So after talking with him during our speakers briefing call, I can assure you, you're all in for a real treat. And then we widen out the conversation with our panel, Brendan from Consensus, and that's a business that's built around trust and security. Michael, Ozone API's founder and co-founder, and chief exec. And I always call Chris the rock star of open banking. So he's a huge amount to add here. And then Chris Haley, CEO of CFAS. And they've all got a wealth of insight to share. And I know that Mike has some figures and some data that he's going to be sharing with you. So before I do pass over the mic, please can I ask you all to have a look at the bottom of your screen, and you can see a QR code. We would love you to scan in your phone and scan that QR code, and you can securely make an open banking charity transaction. Did you see what I did there? You can securely make that charity a donation, and that's to our charity Tech Refugees, which supports those in our sector needing work as they're displaced by the awful war in Ukraine. So Ali, welcome back. I am delighted to have you with us again. Thank you very, very much. We love the mug you have beside you. Love the branding. So over to you.
Thanks, Helen. Not gonna lie about it. When you started off with all these big figures, I was there going, "Oh my God, there's a crap ton of stuff here. I have to bring the A game and be very sensible, because this is quite it is a very important sensitive subject where we go into all the realms of fraud." I love these kind of events. I love these sorts of things here, because this is where you hear those very succinct little nuggets of information, those little quotes that stick in the back of your brain and you bring out whenever the topic comes up. But it's the kind of thing that you can't find just from Googling. It's those organic little nuggets that hopefully from today we're going to draw a lot out. It is very hot here in the UK, and to start off with, we're actually gonna, well, I'm going to be chatting. There's a lot of Michaels on today, but we've got Michael number one. We've got Michael Huffman, from the director of fraud from Go Cardless, who's coming all the way from San Francisco. Now, Michael, first of all, is it as hot over in California as it is here at the moment in the UK?
It's much cooler in the US than it is, or at least in San Francisco where we're at.
It's not like that. It's currently cooler in fact, sorry.
Yeah, I was just gonna say, I'm quite jealous. Everybody's wearing t-shirts and it's cool enough here to where I'm wearing a hoodie because it's quite chilly.
So the UK's got better weather than California at the moment.
Very true.
Right. I want to break down your job, because you hear these job title roles all the time in terms of, VP of fraud, director of fraud, fraud prevention manager. What exactly, being director of fraud at Go Cardless, what does that entail in terms of your responsibilities, but also in some of the day-to-day? What exactly is it that you're focused on in preventing within the fraud department?
Yeah, ultimately, so for those who aren't familiar, Go Cardless is one of the world leaders in account-to-account payments, right? So we have over 65,000 businesses that process money on our platform in an account-to-account manner across 30 different countries, and we moved more than $30 billion, right, per year. So when we think about the remit of fraud, ultimately our responsibility is, one, to make sure that we're protecting Go Cardless from bad actors getting into our platform. We're responsible for protecting the merchants who come onto our platform from bad buyers who have an intent to defraud them. But we're also making efforts to protect the end customer, the payer, from being taken advantage of from bad merchants who intend to sell them a service and not deliver them. So when we think about that ecosystem from a fraud perspective, ultimately our remit is trying to protect across those three lines of different customers.
That makes full sense. I mean, I've used services that are customers of Go Cardless. So as you're looking to protect your customer's customer, that makes full sense. I've got a really, really obvious question for you, but it's actually a really tricky one. What is payment fraud?
Yeah,
it's quite a broad area for you to tackle.
It definitely is. So the way we kind of break this down, right, is so when we think about fraud, you can ultimately tie it into a couple of different typologies. So type one is first party fraud, which is where it's somebody who has bad intent, right? So they're either a merchant who is offering a service to somebody saying, hey, pay me for this good or service without the intent to deliver it. Or it's a bad buyer who's saying, hey, I'm going to pay you for this product or service, then I'm going to dispute it and say that you didn't deliver, or some aspect behind that, or I've stolen somebody's credentials in order to be able to do that. The other aspects are kind of third party, where you get taken advantage of from a scam perspective, or account takeovers, because those kind of sit like in the ancillary components of it. But ultimately, payment fraud is that component of money movement where the money movement is unauthorized. So I've stolen your financial instrument, your credentials, in order to be able to buy something that you didn't authorize, and taking those monies out of your account, or defrauding the merchant for their product or services.
Okay, so there's sort of three sort of main areas which you are on the front line of preventing. Within those sorts of payment fraud, what's the one that is the most effectively terrifying, the one that's most scalable?
That's a great question, Ali. So each of them have different components of scalability, and ultimately it ties back to a fraudster's willingness to invest in order to find something that is scalable. So either stealing information or bulk attacking you with information. I would say that as markets change, I mean, we all kind of understand that we're moving into a more unstable economic environment. The manifestation of those type of losses or the scalabilities of it change, but it's very dependent on the provider. So when we think about different payment service providers, fraudsters are going to try to attack each of them in different methodologies in order to figure out what is scalable on that individual platform. And so it will vary a little bit to each. The one that ultimately kind of how I peel apart what you're asking is like, what keeps me up at night, right? And so when I think about the one that keeps me up at night is that we're moving more than likely into a more difficult economic environment that will cause individuals who would not have turned towards fraud to start turning towards fraud as a mechanism to have revenue, right? And so in that kind of ecosystem, the likelihood of somebody giving you all of the right information, right? So the right identity information, they are who they say they are, they just have bad intent, ultimately to me scales higher. Because from a fraud perspective, when I think about how I identify somebody's capability and willingness to commit fraud, it is generally hooked on that, are you who you say you are? A fraudster is generally going to show up with stolen information, try to present themselves as somebody else. And there are ways from a fraud perspective that we have to identify that with a relatively high bar of confidence. But when somebody actually shows up with bad intent and says, hey, you know, I'm Ali Patterson, right? Here's my information. This is my bank account, right? Everything is accurate and I can verify everything and it is you. I just don't know that you have bad intent. It's the hardest one for me to identify.
That's a very good point there. I'd always find that recently we were doing some work out in Singapore, and Singapore as a nation is quite a rich nation per capita, much less levels of fraud and overall crime, because again, it's a much more stable economic environment. The more, as we're entering a recession, the more motivation there is for people. And as you said, it's those people that are who they say they are, but with bad intent. I can see that being a little bit. On that note, if it is people who are who they say they are, I appreciate in the US that open banking, it hasn't quite got the levels of complexity and uptake as it has here in the UK and Europe and other places. But do you think that businesses should start to be using open banking to verify bank details and identity, even in the few cases where fraud is more of an inconvenience than actually a big significant problem?
I would say yes, right? So the challenge there is balancing the user experience and the friction, right? So the amount of time that it takes somebody to get through the process in order to feel safe and secure that they are who they say they are and they feel safe in their purchase or their transaction. To your point, open banking in the US is very different, right? The definition of it is even different compared to what we see in other areas. US obviously lagging quite a bit behind, considering in UK it was regulatorily driven in order to get to the model we're at today. But I think there is a rich amount of data and information that can be made available through that. And I know we'll talk a little bit more about that hopefully later. But as we think about the open banking component as a scheme itself, there's a lot of security there that we can give our merchants who are processing payments, as well as the customer who's making the purchase, that we can kind of tangibly tie in the risk level. There's a lot of other information that sits kind of behind the scenes underneath that as we think about normal versus abnormal at activity level, right? That we can utilize to identify when something looks suspicious. But I think the open banking component of it is a very strong piece from an identity verification standpoint.
Absolutely, especially with, again, it's connected various different platforms together. On that note, what's next? I mean, open banking combined with payment data to verify accounts. predict upfront whether a payer is likely to be fraudulent or not, monitor for suspicious activities. I'm always impressed when it comes to security verification of all the things that are happening in the background. For example, it's not what PIN number you put in, it's the speed that you put it in. All of those sort of things happening in the background, that sort of 31st parameter stuff always impresses me. So from where you sit, what's next in terms of this fight against, as you highlighted at the start, these three types of fraud that we're seeing?
I think it's a combination of all of that, right? So there's no silver bullet, right? There is no one magic aha piece that's going to say, hey, this identifies fraud so significantly, right? It's how you pull all of that information together. So when we think about the information that could be made available through the open banking components in that standard API pack that comes back, if that can get expanded to include other information that shows the bank's confidence that somebody is who they say they are. If we think about here at GoCardless, right, we have a massive amount of network data from the payments ecosystem perspective to identify what we think are risky individual transactions. When you touched on the component of 41st parameter and the device details that sit behind the scenes, there's so much more that gets built on top of that, right? Because that can tell you your IP location, it can tell you if a device has been hacked, things like that. But you touched on the PIN entry, right? The behavioral components that sit at, not to get super technical, but like the HTTP header level of the behavioral data that comes through, you can tell the URL that somebody is coming from, right? You can tell through behavioral providers how long somebody spends on a page, if their mouse is moving. You can tell if it's a mobile device, how high it is off the ground and what angle they hold it at. There are all these different components when we think about the data that's available from a risk perspective that helps paint that holistic picture. But ultimately what you're doing is you're combining all of these data sets together and all of these different components through the customer journey and their interaction to be able to say, I have a high degree of confidence that this is normal, right? Because ultimately what fraudulent behavior tries to do is appear normal, right? But in essence, that's really hard. What you're actually trying to do from a risk perspective is find the anomalies, right? What doesn't look like standard behavior? If I have a gym that processes payments and their average transaction amount is 20 pounds per month, and I have a gym on board and they're charging 200 pounds per month, if we're X standard deviation away from normalized behavior, like that, those are the things that stick out. And when you're touching on those data pieces, it's how do we meld like all of those pieces together to figure out what's statistically significant in that to find anomalies in the activity. And I think there's just components of each of those that end up getting tied together. Again, and I'll hop off my soapbox, but there is no like silver bullet that says, yes, we use this one component. It's ultimately how do we continue to piece all of these together, right? And as new data types come available, because bluntly, the fraudsters know this stuff, right? There may be some listening or watching meetings and calls like this, right? They want to know what we're doing as well. And so when we think about that, it's how do we try to stay one step ahead where we're actually probably one step behind? And how do we continue to think about new ways to look at the data to identify those pieces?
There's the, if I'm watching this from home, there's the first tweet of the day, which is how do we stay one step ahead when we're probably already one step behind? That's I've a lot to think about there. I said 31st parameter because I'm an idiot. It's 41st parameter. That's the that's what we're talking about. Right. Okay. Well, I want to bring on the rest of the panel now, and we've got quite a good variety of content from everyone coming on here. However, I want to make sure everyone's really paying attention because we've got a lot of Michaels. First of all, can I bring in Chris Michael, who's the CEO and founder of Ozone? How are you doing today, Chris?
Thank you. Thanks, Ali. Hi. Yes. So I think this is a fascinating topic. I was something very close to my heart. 5 years ago, 6 years ago now, I was approached by the UK Open Banking Implementation Entity, the OBIE, to lead the development of the UK Open Banking Standard, and I did that for a number of years before setting up Ozone. What the primary objective, if you like, or the first objective that we had to meet in terms of designing the kind of new model of open banking was one around security and trust, and so we put a lot of effort into designing this kind of security model and trust framework for open banking. So this is something that is very close to my heart. At Ozone, we build enabling technology for banks and FIs to provide secure open banking API interfaces. Perfect,
excellent. Also joining the panel, we've got Mike Haley, who is the CEO at CFAS. Mike, whereabouts are you? Tell us just in a nutshell a little bit about yourself and the work at CFAS. Don't worry, lad, like a lip read.
I have to unmute myself. Yeah, I think it's a really fascinating insight that Michael's provided around the kind of data combination, because CFAS, which is a not-for-profit organization that brings 600 or so organizations together, mainly the retail banks, but others in the credit industry, to collaborate and create a shared fraud consortium, which we call the National Fraud Database in the UK. And that's because it's imperative that we actually do speak to each other in this community, as Michael's saying, around as the fraudsters do. They compare notes about how to get find the weakest links in the financial system. And I think what we've seen very markedly in the last year is this shift from unauthorized fraud, card not present fraud, to authorized fraud and scams and authorized push payment fraud. And I put that down to partly the success of security and fraud in design. And it meant that the weakest link is now the customer, and they're pushing out. And from the very outset of open banking, CFAS said, well, we need to bring into this wider community, the whole ecosystem, new players to be able to also be part of the common defenses. So CFAS is all about common defenses, things about sharing data, intelligence, and learning, and participating in such events where we can start that active sharing of knowledge of how to stay that one step ahead of the fraudsters.
The weakest link is now the customer. We're going to come back to and unpack that in a bit, because I think that's something we're going to be going into. And rounding out the panel, we have got Brendan Jones, who is the COO at Consensus. Brendan, tell us a little bit about yourself, your role, and all the cool stuff you're doing at Consensus.
Yes, I will do. Good afternoon, everybody, and really glad to be here on such a hot topic on a hot day here in the UK, it has to be said. You say I'm from Consensus. We're a RegTech company that provides identity and regulatory checking services for banks. We're very much a European-focused organisation. Chris mentioned UK Open Banking. We operate within Europe. We've always said that Europe was behind the UK. UK obviously is a barometer, I think, anyway, for Europe, and we're now starting to see transaction volumes significantly increase across Europe in open banking. But with that brings fraud, that brings risk into the ecosystem, and we deliver services that allow banks to be confident that third parties who are trying to access their APIs are indeed regulated to provide the services for which they're trying to access payments, customers' payment accounts, and so on. And as we go through here, I can give facts and figures, but we are starting to see trends in the market. We see people who are trying to access accounts who aren't authorised to access accounts, people that try and provide open banking services in jurisdictions for which they're not regulated in, and so on. So it's a really interesting topic, looking at it from not just the payment service user's perspective, but also the bank's perspective, as well as we move from open banking into this more flourishing environment of open finance.
Brilliant, thanks for that, Brendan. You've actually kind of highlighted there something for this panel, which is brilliant. Which is we've gone over what the problem is. There's a lot of different problems within fraud. There's a lot of open routes that kind of need to be plugged. The first thing I'm going to want to discuss is open banking and open finance, is it a magic bullet? Is it foolproof and secure when it comes to leaks, hacks, and frauds? What are the limitations? What are the limitations within this? And if I could go to Chris yourself first for this.
Thank you. I mean, I think that certainly, you know, as Michael said, there is no silver bullet, and open banking isn't a silver bullet to solve for fraud. But it does a number of things very well. I think it's dependent on how well it's implemented is the bottom line. So we put a lot of effort into designing a secure trust framework and a security model around open banking. You know, we were to some extent helped by some of the regulatory requirements. I'm not necessarily going to extol the virtues of the EU's regulatory technical standards, but there are some good principles in there around secure communication and strong customer authentication, which are designed to ensure that only regulated actors can access the bank account, and that when the customer is either accessing their bank account, or when the customer is providing access to a regulated third party, they do so using strong customer authentication. And that in itself, if that's done well, it can provide good customer experience and good security. The challenge is it isn't always done well. What we did in the UK is we developed, I think, a pretty good standard for open banking that's been widely adopted in the UK and has formed the basis of many of the other standards globally now that we're seeing. But again, it depends how well it's implemented. And, you know, as an example of that, there's lots of things in the standard that can be used to provide extra identity information. For example, the identity attributes of a customer, name, address, etc. There are things in the flows, in open banking flows, extra data that can be shared around, for example, alongside payments. You can share things like delivery addresses. Banks and third parties can share IP information, all sorts of things that can be used. The problem with all of that stuff is that while it's in the standard, the regulations didn't mandate it, and so the implementation has been very sketchy. I think that's the challenge, if you like, that we've got, is that it hasn't been implemented consistently, and some of these other attributes aren't being used particularly well. Having said that, I don't think there's any evidence that open banking creates any additional fraud vectors or is actually creating any additional instances of fraud. And actually, I would argue that if open banking is implemented well, it should significantly reduce instances of fraud. It should be a much safer, more secure method of access, because you've got regulated parties involved, and in payments, for example, you've got two regulated parties in the flow of a payment. So that should, if it's done well, and if the incentives are right on both sides, both for the PISP and the bank, that should result in more secure payments that better protect customers.
Michael, can I get your thoughts in here? Because you did highlight, you know, about being, we're not quite sure again how far behind we are of the fraudsters, if at all. Where do you see the limitations of open banking in terms of being that magic silver bullet? And to kind of draw out a little bit around what Chris was saying, do you think that that's down to implementation or just to the nature of the beast?
I think Chris has some really good points. The aspect of the implementation of the standard is critical, and the aspect of what data is shared and when. There's a significant amount of incremental data that could be made available from a consortium perspective that basically would help us all in the fight against fraud. In lieu of that, from a fraud perspective, we've gone down the path, and others have gone down the path of where can you get this incremental information from a third party perspective, right? So we have data partners that we leverage to identify the riskiness of certain features and attributes that are available in the data space, right? So there are providers that can tell you, you know, from a consortium perspective, how far back they've seen an email address, right? And when was the first time they've seen it and how many times they've seen it. They can tell the legitimacy of a business, whether or not it's registered. So I think it's one component of it. the piece to me that stands out is it's a friction component that a good customer is willing to go through, right? And the part that fraudsters tend to not want to do, right? It's how much can they get away with the lowest amount of investment on their time, right? It's kind of the old, well, there are two types, right? There's the smash and grab, and then you have the highly sophisticated one who is really hard to catch. But it's ultimately what kind of friction could you put in place that a good customer is going to be willing to go through, that a fraudster is just not going to put that time and investment with the risk of tipping off the victim, right? So if I get, if somebody uses my credentials and logs into my bank account, even if it's me, like I get a text message on my phone, right? And so there are aspects where when we talk about leveraging that data, tipping off the victim is something that a fraudster doesn't want to do. So it's one piece.
That's a good point there around, yeah, with tipping off the victim, that then sets a cascade of alerts. Mike, I could see your bouncing that. I want to weigh in here. I've got to get your take on this, particularly as well from the consumer perspective. Oh, what's that? What's your bank details? Oh my goodness! Don't say those. Oh, still on mute.
It's I think I'm being muted. I think we really need to, when we consider it, is open banking foolproof or is it going to be attacked? I think we need to look at the wider context. I don't think open banking in itself, as Chris indicated, has created any new fraud typologies. But I think what it has done is increase what's known as the attack surface, the number of entry points for fraudsters to be able to attack or try to get into the system to initiate a payment in particular, or to intercept the type of personal information they need to be able to conduct fraud attacks. So I think we need to consider that the background to this situation is the massive increase in fraudulent attacks over the last couple of years, particularly through the pandemic. Most traffic now being online, most value being digital. We have seen organized crime specifically going into fraud. Last year, as well as those significant figures for the hundreds of millions lost by banking, we saw something like 5 million individual frauds being conducted in the UK. It's over 40% of all recorded crime. And to the National Fraud Database, we had 360,000 cases filed to the database by our members. That's one every 90 seconds. You know, by the time I finish this sentence, another fraud has happened. But I can give you a kind of exclusive. I looked up what's happened in the last 5 months. It's not, my PR department will probably slaughter me for telling everyone here first. But we have seen in the first 5 months of this year, identity fraud continue to increase by 39%. This is both stolen identities and synthetic identities. Facility takeover or account takeover increased by 109%, mainly hitting the telecoms and online retail industries. And false applications up by 59%, which is mainly applications or false applications for bank accounts. These are startling figures for us. Remember, we were talking about 360,000 cases last year, and we're seeing that type of increase at the moment. So that's across the whole ecosystem. So if we start seeing open banking having TPPs being attacked, it's part of that more general increase in organized crime attacks against the banking system. It has increased the number of entry points. It's part of the wider ecosystem, and there are new opportunities for fraudsters, but no new typologies. But also, just to kind of put a balance on that, looking from March and the full implementation of secure customer authentication, we've actually seen a downturn in card fraud. So I think that, you know, instead of being one step behind, I think we can see that a little bit lazily. We can see that we are one step ahead. We have forced the fraudsters now to attack the consumer, to try to manipulate them to make that payment, initiate that payment on some ruse, whether that is saying that their account's been manipulated or for an investment scam, whatever it might be, because it's increasingly hard for them to take an account over. It's increasingly hard for them to initiate the payment. So I think that the security by design in the system is working, but the backdrop is so many fraudulent attacks that you could get lost in the noise that actually has been success here in terms of the creation of the trust frameworks and security by design. So it's that, I think, is the context. I think open banking has opportunities to also contribute to reducing fraud through mechanisms such as being able to check bank account information to verify identities. So it's part of the solution as well as being a target for the fraudsters.
That is, Helen, are we allowed to swear? Because that's that is, yeah. Brendan,
Awesome
I've
the word you're looking for. Awesome.
Yeah.
Yeah.
That is, well, it's not the level of fraud been awesome, but the increase is pretty spectacular in volume. Brendan, partly in response to what Mike highlighted there, I wanted to get your take on open banking in terms of, again, a solution to help lower this quite endemic fraud levels down, but also whether there's any particular risks when personal data is being moved about when it comes to identity and personal fraud. Brendan, over to you. I can see you itching to weigh in here.
No, it's interesting. I wanted to say a lot. I think we're talking about open banking payments. They are minuscule and marginal in the scheme of open banking transactions that currently take place, and they're going to grow. Great, we want them to grow because there's so much business benefit for open banking payments and so on. But the bigger issue for me is one of data disclosure. You know, we've just heard about account takeovers and everything else. You know, if these criminal organisations can get at accounts and get information, that information becomes invaluable to them, and also gets resold on, as we know, on the dark web and around the world and so on. And you know, I think open banking is a success. And you know, I take Chris's remarks at the very beginning about how much effort was put into the UK standard, and that's shown, and it's brilliant. But that's just the UK. There is a European continent sitting there that's using many different specifications. There's not the conformance testing to see how well they've implemented. So some people have done good jobs, some maybe not so good. And it doesn't matter whether you've got standards, it's how well they're implemented, as Chris said. So I really do support that. But what I do think is the more important thing is the regulatory umbrella is not wide enough at this moment in time, because Chris mentioned, you know, you've got two sort of regulated entities communicating with each other. Very true. But how many organisations now are selling their services outside the regulatory envelope to organisations who are not covered by the regulators, who have not got the systems and the processes in place that we would expect from regulated organisations? And I think as we move into the open finance arena, that's going to be even larger. If you read the EU's open finance papers and so on, they're talking about regulated entities and non-regulated entities coming into the ecosystem. So, you know, open banking is a great thing and it's delivering great stuff. But I think let's not fool ourselves, it's purely about payments. I actually think there's more value in data. And if that's compromised, then that's a big issue. Do I believe there's someone in a balaclava knocking on the bank's APIs trying to get data? Maybe. Do I believe there's more likelihood of a bank disclosing data inappropriately? Most likely. And there's a history of banks, you know, exposing data when they shouldn't have done. And, you know, we need to look at all aspects of this, but we need to look at the fraudsters, but we also need to look at system implementations to ensure they only deliver the data they should be delivering to the organisations that are regulated to accept that data.
Brendan, on that note, in terms of, I mean, we talk about the fraudsters a lot, and you actually raise a very good spot. There's 2 points there I kind of want to unpack a little bit. In terms of the frauds themselves, you know, you do think of, you know, the bloke at the black balaclava knocking on the bank's API. I don't think that, is it more of kind of criminal gangs? Is it more lone wolves? Is it more opportunists? Or is there absolutely sort of no trend in terms of the fraudsters that we're dealing with from your experience?
The data we collect doesn't give us that granular level of information, so I couldn't comment either one way or the other to answer your question directly. What I would say is, you know, we're a European business, well, actually a global business now, but in Europe, we've got over 500 banks that use our platforms. of those banks that process on our platforms, roughly every month, just over 1% of transactions get declined because there's some problem with the identity verification of the third party. And it ranges from an organization who's unregulated, trying to access the APIs and accessing data, through to organizations who aren't regulated to access the services for which they're attempting to. So, maybe trying to do an account access when they're a PISP. And the other one is we see people trying to operate across Europe when they haven't been authorized to operate in specific jurisdictions. So there's a whole heap of reasons why there's over 1% transactions decline, but the fact is they are being declined. And if those banks process those transactions unknowingly, then obviously the liability is going to reside with them, and at least the reputational impact is going to be on their shoulders.
Brendan also highlighted there about, again, it's not just about money, because with all, not to sound all hippy dippy, but money can be replaced, but your personal data, once it's it's out there on the web, it's almost impossible to lose that. I know there is the right to be forgotten, but realistically, it's very, very hard. Michael, I wanted to talk to you a little bit about that element of consumer data. Do you think that the consumer, whether that be an individual or even a small entity, do you think they're aware and understand the rights and responsibilities around data consent?
No.
Excellent.
Sorry, I don't have a blunt answer for that. I think my personal opinion is that a lot of people get checkbox happy, right? You're going through a flow and you come up with a consent box and you check yes, and not until something goes wrong do you understand what you've consented to from a data perspective and what all of the fine print actually says underneath that checkbox.
Everyone on this panel is within the industry. Can I ask a very honest question? Personally, have you ever read the terms and conditions that pop up, or is it stroll straight to the bottom, tick the box and hit I accept? Anyone read them at all?
I find it very difficult to read 8-point type.
I can say I honestly gave it a go once and gave up about maybe 10 seconds in. And I mean, I read tons of terms and conditions when I'm looking at products and services, but never when I'm doing it for myself.
But it might be that you still understand in general terms that I'm giving my consent that this app or this provider will have access to my financials to provide a service of bringing that data together so that I can manage my finances better. So I'm given consent through that process because you understand what the services be provided. So I think there is, most people don't read everything. And I think this is where trust in the whole system comes into place, and trust with the players, because as long as you're using that data you've asked for that purpose, you signed up for an app that's going to help you manage your finances better, and you're allowing them access to your bank accounts and other stuff. As long as then you don't abuse that trust and use that data for other purposes, then I wouldn't go back and start reading what did I actually sign up to. So I think this is a really big issue, particularly in an app-based journey, for someone to sign up, that they're given as much the real pertinent information to know why you're signing up for and what's going to be used for your data, without the expectation that you've hidden within lots of those terms and conditions ways of using data which would abuse that trust. But you can say, well, you did agree to it, when clearly people haven't agreed for it to be used for other purposes or to be handed to others. So I'm less concerned around does people read it all, as long as within the sign up journey it's clear about the most important things you're going to be your data is going to be used for. And trust is hugely important here, and this is why I think that in the earliest days, both be it for a customer to give trust, I'm trusting this service that I'm not going to be defrauded, that my data is going to be kept secure, and you're going to do more or less what you told me on the tin. And I think if you do that, then most times people will trust the organization and the wider environment.
I'm so glad you highlighted that. But go ahead.
Yeah, sorry, I was just gonna say, I think Mike is spot on that, right? I think there's an aspect of may not understand all the protections and components that sit underneath it, but there is a basic level of I'm signing up for X service, So my expectation is X service is doing A, B, and C. And it's generally in those areas where they find out they're doing, you know, J, K, and L as well, that comes surprising, right? But if there is an intrinsic understanding of, if I'm signing up for a financial services app, I'm expecting it to do X, right? It's where I'm signing up for a financial services app that's now sharing my information with X that, you know, I don't expect.
I think this isn't a payments issue, and it's not an open banking issue, and it's not even an open finance issue. I mean, we're kind of on this sort of global movement, if you like. It's happening differently in different parts of the world, but there's a global movement towards this wider open data economy. And there's a very interesting kind of phrase here, which I love to repeat. It's that data is more valuable in the presence of other data. So as you start building this model out and looking at not just financial data, but all sorts of other data that could be combined with financial data, it could be retail basket level data, it can be, you know, data from personal fitness trackers, etc. You know, this data, it could be social media data. This data gets increasingly more valuable and therefore more risky and more attractive to fraudsters. What's good about the open banking model, or at least the kind of standards that I think we created in the UK, and they were designed to scale, not to solve yet, but to scale to cater for other use cases. What's good about it is that it assumes, you know, you've got regulated parties, certainly the account provider or the bank and the regulated third party. It puts a certain set of parameters around the consent flow so that they are standardized, so that it doesn't solve the problem of making people really understand all the terms and conditions, but at least what it does do is allows for data minimization, so that you know, third parties can construct a use case or ask only for the data they need to fulfill that use case. There's a lot of good stuff there that can be used and leveraged. I think the challenge that we've got here is, and Brendan touched on it, is when data goes outside that perimeter of sort of regulated firms. But this is just going to get a bigger and bigger risk, but it's also a bigger and bigger opportunity, I think, because and it's just something we have to you know, as society and regulators have to look at and deal with, is how do we kind of, without putting too many constraints and barriers about things, how do we put the right controls in place? How do we hold firms to account about this? GDPR does a bit of a job there about holding firms to account, but it doesn't do anything about actually compensating a customer if their data is lost. So there's still a lot of work to do, but I think the key thing is that we've got some really good building blocks there that I think we should build on, around how regulated parties can be involved in the flow of data, how they can parameterize consent, how that can provide, if you like, a better outcomes for customers.
Chris, that's you're so wise. Honestly, that data becomes more valuable in the presence of. I'm gonna steal that and claim that as my own. That's a very valid point around there. We've got an absolute barrage of questions that have come in. I will get to those in a bit. The last thing I kind of want to bring up before we look at the questions, and Brendan, I'm going to go to you first, which is about, we've talked a little bit there around the consumer, and obviously understanding their rights and abilities and the difference between rights and responsibilities in comparison to trust. But if fraud does occur, is the consumer off the hook? Where does the risk and responsibility lie? Where do we kind of have that sort of element in there? And Brendan, I wanted you to talk a little bit about, I think it was yourself on the kickoff call, that there almost needs to be an element of fraud built in.
Well, yeah, no. Well, so I've worked in banking for more years than I care to remember, and every single fraud director I've ever spoken to said, if I haven't got any fraud, I haven't got a business, because you've locked down the channels so tightly, no one can ever transact. So every financial institution has a risk appetite, and it's different from one organization to another. Some are more conservative. You've got others that are much more liberal with their risk appetites on. But the fraud ultimately is with the entity So, for example, if it's a payment fraud and it's a third party that's initiated it and the customer complains, then the liability resides with the third party, as long as the ASPSP, sorry, the bank, getting a bit terminology there, has gone through the right checks in terms of, you know, strong customer authentication, ensuring that the third party is authorised to provide those transactions and so on. But it's not just about who's liable, is it? At the end of the day, if you're the bank that's providing the bank accounts and the fraud has hit your bank, your customers are going to be looking to you, not necessarily the third party, as the organisation to recover those monies that have been lost. And again, with data, they're going to go to the bank, not necessarily the third party. And there's the reputational impacts the banks have to think about as well, even though it might have been not the bank as fault that the fraud took place. But I think it then brings on a slightly wider discussion about if there is problems for a consumer and they complain to their bank, how do you then resolve those disputes? This is an area in open banking that no one's even touched upon at the moment. You know, we have remediation processes for about every other payment channel in the UK and within Europe. But if you look at the PSD2 regulation, it provides very little lip service about how a bank, for example, would reach out to a third-party provider to resolve a dispute when it actually doesn't even know that third party and has no legal contract in place with them. So, you know, we're starting to get into an even broader discussion, I think, about how you go forward with dispute resolution when these disputes arise in the first place.
Excellent. Thank you very much for that. I've got a bunch of audience questions here. Some of them, I want to throw this one open to Michael, because I think this is quite aimed at yourself. About let's not beat around the bush. The likes of Amazon, Google have got their data empires. They've got so much information that it could arguably dwarf the information that a bank or even a small fintech has. How helpful have they been in helping the whole online ecosystem battle online crime? And what's your stance there with these big, I love that as a term, so thank you very much to whoever did that from the audience, data empires?
Yeah, I think that originally the likes of Amazon and others did think that they had significant amounts of data to be able to run their own algorithms and have so many points and data points to be able to have their defenses really siloed. But I think they're now coming to more of a realization that, you know, organized crime, individuals who are persistently going across many platforms, there need to be a sharing of that data. And it's the kind of maturity of the scheme. I always look at, first of all, in industries, you have to start sharing data within your organization. A different level of maturity is you start sharing across all the banks. Then you start looking at another level of maturity across industries, thinking, you know, fraudsters go across industries. And then I think the next level of maturity would be globally. And of course, these organizations are global. So I think they're moving in that direction, and I think that they've got also a responsibility to be able to open up their data to be able to protect the whole ecosystem, because we're dealing with fraud and fraudsters and criminal gangs, and you know, I think there's a responsibility. So in short, I say not enough, but I think they're coming to that realization. But I'd like to see them move quicker to being able to open up their data sources for those who are bad actors, and that can be friendly for the individuals, first-party frauds, as well as those where you've got organized attacks, where you've got multiple credential stuff in, for example. So yes, they do have lots of data, but that's a really great advantage. If we can open up that relationship to be able to obtain that, then we can be more effective and be one step ahead of the fraudsters.
I'll let
Hope
Jeff and Tim know. We know they are. We know they are. They're all-powerful absorbing data. I have another question that's come in, which I kind of want. I actually think, Chris, this would be quite a good one for yourself, actually, and just in fact everyone actually, which is the introduction of confirmation of payee. Chris, do you think that's something that's had an impact in terms of fraud levels, particularly in the UK?
I actually don't think it's necessarily had a positive impact, and there's some evidence to suggest it's had a negative impact. But
expand.
I probably would probably leave it to someone else. Maybe Mike has got some stats on that, but certainly confirmation of pay. If you think of the principle of being able to pass additional data before, during, after a payment to validate whether an account belongs to the right person, that principle makes sense. But really, confirmation of pay won't solve authorized push payment fraud. It'll solve, fat fingers. It will solve people typing in and misdirecting funds because they've accidentally got someone's name wrong, or sort code or account number wrong. So it will stop, it will and does stop misdirected funds quite successfully. But authorized push payment fraud, the fraudsters are clever. They create accounts that look and sound like a real person, and the name of the account will match the sort code and account number. So all confirmation of pay will do for authorized push payment frauds, it will give people false confidence that they're paying the right person, because they get a green tick that the sort code and account number matches the name. And if it's a fraudster, they'll trust it when they shouldn't trust it.
Yeah, I think, Chris, for your challenge, I think there is some evidence to show that less sophisticated fraudsters and fraud are detected through a confirmation of payee, but not more sophisticated. We recognise when it was coming in that if you're a fraudster, you'd be setting up accounts already or renaming accounts to be able to get around those processes. It's one element. It's not, it was never even seen as a silver bullet. It's one element in also like dynamic messaging, warnings about why you're opening a new account, a beneficiary. So I think that it's just one of the defenses. And in fact, of course, with the kind of API payload, we could look to actually within the open banking world, in exchanging other information like around beneficiary payment details, it could be more secure. So confirmation of payee, I think it's going to be beneficial for a particular time, and then it won't be anymore.
Michael, can I get your thoughts around this, especially being stateside, whether confirmation of payee, which we have in the UK, whether that's something that you think could perhaps reduce fraud, or to Chris's point, may even increase it with that false confidence?
I think actually Mike is spot on with this, right? I think it works for a very specific type of fraudster, right? The evolving ecosystem. So risk and fraud is an evolving ecosystem, just like our economy evolves, right? And as things pivot and change, fraudsters' ultimate goal is, how can I get through with the least amount of friction at the highest dollar amount to scale my business? Because ultimately, fraud is a business, right? They have an ROI curve, just like we all have an ROI curve. They have a willingness to accept a certain amount of pain, and pain meaning here's how much time I have to invest in order to get this money out. And ultimately what they look for is the fastest way to do it. And there are, for lack of a better phrase, there are dumb fraudsters who are lazy and try certain paths. And then there are really smart, sophisticated fraudsters who utilize the data aspect that Chris mentioned, where I've got an identity file that's augmented with credit information, purchase patterns, social media behavior, all these different components to try to make it look as real as possible. And so I think it helps with a certain type, but I think just as with everything else, it'll evolve, right? Like the confirmation of pay will evolve just like we see other data sets evolve. And I'm curious to see where it ends up continuing to go to.
So we're rapidly running out of time. I've had another question through, and it's kind of ruined what my last question is. I just want to very quickly zoom around the panel. I want to get one piece of advice that is often overlooked completely, not the kind of advice that pops up as an infomercial in the middle of a TV show about don't share your data online. What one bit of advice would you give out to the average consumer to help lower fraud? Brendan, I want to go to you first. Something that's a bit unusual that you think actually that's a good idea.
Crikey, you didn't have to start with me, did you? Well, I don't. It's just look. Most people are not paying attention, are they, when they're giving signing up to things and so on. And I think it's all about consumers paying attention to what they're doing and being diligent. You know, you can't legislate against stupidity. As Chris said, you know, confirmation of pay stops people from putting the wrong account number in. And those sort of things. And it's, I just think it's about diligence personally. Maybe my colleagues on the panel have got more profound things to say. I'm afraid I'm quite basic on this.
No, that's a valid point. Chris, can I go to yourself?
I mean, I totally agree with what Brendan said. I think, you know, people have to be careful and diligent and take some ownership. And I think, particularly when it comes to payments, I mean, there's a very simple trick I use. If I'm making a payment of a large amount of money, I pay someone a pound or a penny or something via faster payments to make sure it's the right. I don't trust confirmation of pay. I don't trust my own typing skills. I make a payment and set them up as a beneficiary once I know they've got their pound payment. You know, and I actually think that that's something that open banking could do. You could build quite a slick piss flow that could do that. So my word of advice is just for people to be diligent, but also it's not advice for consumers, but it's advice for FinTechs to look at addressing some of these problems and come up with some innovative solutions to kind of do that.
Absolutely, take a bit of ownership there. Right, Mike, yourself?
Yeah, my piece of advice in all these circumstances, particularly those who are running organizations, is when it comes to fraud and financial crime, let's leave competition at the door. We've got a common enemy. Let's share in data and intelligence. The OBIE has a security and working group that helps share intelligence. CIFAS has members in the banking and payments community. Let's talk about the frauds that we see. Let's share that information and see it as a common defense.
Yeah, a common enemy, right? And Michael, yourself, what's the bit of an unusual one that you think people should pay attention to?
I agree with what Brendan and Chris said. Like, there is no like super obvious one, right? Other than than diligence. I kind of believe in hey, if it sounds too good to be true, it probably is. And there's no Nigerian prince who's looking to send you money into your bank account. So the component of, like Brendan said it really well, you can't legislate ignorance, right? And so the aspect of being diligent with your information, knowing who you're giving it to, and knowing nobody is looking to send you £1 million for you sending them 100.
God, but imagine if they were, though. Imagine that there's just thousands of princes in Nigeria with all this money sat going, nobody wants this. Well, guys, thank you so much for the panel there. This is why I love these things, because I end up learning a lot, and I'm definitely going to be stealing a lot of what you guys said and presenting it as my own thoughts. Yeah, so thank you very much for that, Helen. Thank you. Little OBE flag for you there. Thank you so much for having me on. Over to yourself.
Ali, I love your props. Thank you. After all that expertise that our panel shared, you deserved that drink, because wow, what a sobering conversation it really was. And I love the prop of the can there. So thank you very much. All that remains for me is to thank our panel. They have shared a huge amount of insight. We get asked every year to do a panel on fraud and security. And we will be sharing this online. And what I can tell you is that our viewing figures are consistent. So this session is actually dipped into and seen around the world, month in, month out, month in, month out. This is a conversation that everybody wants to continually talk about. So what I would say is that we'll be putting it online, and we will be sharing it across all of our channels. So do please follow us to keep up with the conversation, and do reshare it. So thank you very much to our panel, and also thank you very much to the OBE team who work incredibly hard behind the scenes, not just with our campfire, but with all the other stuff they do in the community. And on a day where we have had 1 billion transactions per month announced. I actually think, though we might have had a very sobering conversation, as an industry, we're actually in a good place. And the fact that we can have this mature, in-depth conversation around fraud actually goes to underwrite that. So Ali, it's been an absolute pleasure for you to guest host our panel. I do hope you'll come back again and enjoy that cocktail. Not quite sure what it is, but it looks fruity and summery. So thank you very much, Ali. All that remains is for me to wish you good health and happiness. Take care and see you very soon. Thank you. Goodbye.